Welcome to this Talk Tickers briefing on Cheniere Energy's Q3 2025 earnings. On the surface, the numbers send a really confusing message. We're talking a huge profit beat, but at the same time, a major revenue miss. So, which one tells the real story here? Well, let's find out.
All right, here's how we're going to solve this puzzle. First up, we'll break down those conflicting headline numbers. Then, we're going to go behind the scenes, see if the company's operations tell a different story. After that, we'll follow the money, see exactly where management is placing its bets. And finally, we'll wrap it all up and give you our clear outlook on what this all means for the stock.
Okay, first up, that headline. This quarter was a classic Wall Street puzzle. You've got this huge earnings beat right next to a really significant revenue shortfall. Yeah, this is exactly the kind of report that leaves the market scratching its head.
So, right here, this is the core of the market's confusion. On one hand, you have the bottom line. That's earnings per share, and it just soared past what anyone expected. But then on the other hand, the top line, total revenue, fell way short. So let's actually put some hard numbers on this.
Wow, the earnings number was an absolute showstopper. Cheniere delivered $4.75 per share. Now, to put that in perspective for you, Wall Street was only expecting something around $2.95. That's not just a beat, that is a blowout victory on the profit front.
But that celebration around earnings, it was cut short by the revenue figure. At $4.44 billion, it didn't just miss expectations, it fell short by over $400 million. A miss that big, well, it raises immediate red flags. It forces investors to ask, hey, what's going on here?
And here you can just see that conflict laid out so plainly. Look at that massive spike for earnings, way above what was expected, and then you contrast that with the revenue bar falling short. So, okay, you've got these two completely opposite signals. What on earth did the market decide to do?
Well, the market was basically split. After those initial numbers dropped, the stock barely moved, finished the day pretty much flat. And that tells us investors were digging deeper, right? They were trying to figure out which of these numbers told the real story. To understand that, we've got to look behind the figures, at the company's actual operations.
All right, let's get into the operations. So how do we explain this split? Well, we've got to look at the operational story. Because even though that revenue number was soft, management's message was crystal clear. Hey, forget the top line for a second, focus on our execution. And this really came through on the call. Despite all the noise about the revenue miss, CEO Jack Fusco, he projected nothing but pure confidence. He pointed directly to strong execution, to real, tangible successes across the entire business as the real measure of how the quarter went.
And you know what? Their actions totally back this up. Look at this. Operationally, they are firing on all cylinders. They're bringing massive new production capacity online ahead of schedule. They're signing new, multi-decade contracts that lock in future revenue. And they're forecasting record output for next year. This is the story of a company that is hitting every single one of its targets.
Okay, so all this operational strength, it leads directly to what I think is the most important part of the story for investors, cash flow. Specifically, how management is putting that cash to work. Because this is where the real confidence signal comes from.
And here it is, the crucial point. Cheniere significantly raised its guidance for full-year distributable cash flow. We call that DCF. They didn't just nudge it up, they bumped it up by $400 million to a new range of $4.8 to $5.2 billion. Let me tell you, for a company this size, that is a substantial increase.
And just so we're all on the same page, think of DCF as the core cash engine of the company. It's the money that's left over, the cash that can actually be returned to shareholders. So, by raising this guidance, management is signaling that their engine is running much stronger and way more efficiently than even they expected.
So, where'd all that cash go in Q3? Well, just look at this. The biggest slice by far? Share repurchases. A massive $1 billion spent buying back their own shares. Now that is a powerful statement of confidence in the stock's value. And on top of that, they're still funding growth and paying out a healthy dividend.
Yeah, this all-of-the-above capital plan is just aggressively returning value to shareholders. Think about it. $1 billion buyback in a single quarter, a 10% dividend hike. These are absolutely not the actions of a management team that's worried about a revenue miss. No way. This signals deep, deep confidence in powerful and predictable future cash flows.
Okay, so let's bring it all together now.
We started with a really confusing headline, right? But the underlying story of operational strength and just powerful cash flow, well, that paints a much, much clearer picture. So it's time for our verdict on Cheniere's quarter and what it means for the stock.
The key question we started with was this: does the operational strength and the cash flow growth outweigh that revenue miss? Well, after digging into all the details, the project execution, the capital returns, we believe the answer is a definitive yes.
So, looking ahead to the next call, here's our official outlook. First, we predict EPS is going to stay strong thanks to all that new production capacity coming online. Now, revenue? We think that could remain a bit of a wild card, maybe even see another miss, just because commodity prices are so unpredictable. But, and this is the critical part, we see modest upside for the stock. Why? Because we believe the smart money is going to ignore the top-line noise and focus on the real story, the powerful cash flow and the buybacks.
And for that reason, we are assigning an outperform rating to Cheniere. We believe the superb operational execution and that enhanced cash flow guidance, well, they more than justify a positive outlook. It resolves that initial mix signal decisively in favor of the bulls.
This is not financial advice.